Palm Beach County, our local real estate market, printed some very interesting data this past month. Forget about the national headlines. We all know that real estate is hyper local. Let's dive into the local market data for May of 2023 and find out what that's telling us. I'm Larry Mastropieri, broker owner of the Mastropieri Group based right here in Palm Beach County. And I promise you, if you stick around to the very end of this video, you will have a better understanding of this real estate market than 99% of the people that are looking or active in real estate here in South Florida. Let's get into the data right now. Let's check out the average sale price data from April of 2022 and compare it to April of 2023. You can see we've experienced a 4% decrease in the average sale price over this period of time. So according to this statistic, homes are worth 4% less than they were at the same time last year. This is where I like to pivot to look at the trend line though, because when we're just looking at singular data points from April of this year compared to April of last year, we can have a limited perspective on what's happening. So if we look at the data from June of 2022 and compare it to April of 2023, you can see we've experienced a 9% decrease in the average sale price. Now that's a pretty steep decline in the average sale price data and something we haven't seen in quite a while. And I think most sellers don't understand this or are aware of it. And the data basically communicates that, because if you look at the new and active average asking price data, you can see that the average asking price is higher now than it was last year at the same time. Now that doesn't really make much sense in a declining market, does it? Something else is interesting about this trend line though. If you look closer, check out the average sold price data for the last 3 months. You can see that it's increasing, not decreasing like these other data points are suggesting. So that's just an indication that we're not plummeting here to our doom in South Florida. The real estate market still is pretty healthy. Let's look at some other data to understand more. Now let's check out the median numbers. It's always good to cross-check ourselves with the median data just to make sure we don't have random, extremely large deals skewing our analysis. If we look at the median sale price data from April of 2022 and compare it to April of 2023, you see that we've experienced a 1% increase in the median average sale price. Now that's a little different than the data we were just reviewing. Now this is a valuable moment right here. Now you can see why some people are saying the market's crashing, it's down at 9% on average since the peak. And then others are saying, oh my gosh, the market is just fine. We're actually appreciating. We're up 1% since last year. So you can see if people look at data in isolation and don't really look at the full picture, you can get a skewed understanding of what's happening. So let's continue to look at a little bit more data here to get a better understanding of what's happening in our market. Final note on the median sale price data. If we look at the trend line and compare June of 2022, which is the peak, to April of 2023, which is the most recent data we have, you'll see that the median sale price has declined by about 3.2%. So either way you look at it, whether you're looking at the average data or you're looking at the median data, there is a decline in the sale price. It's just a little different, 9% for the average and 3.2% for the median. Now let's talk about the sale to original list price ratio data. This clearly shows that homes are selling for significantly less than what they are originally going on the market and asking for. In March, April, and May of 2022, most properties that went on the market were selling for exactly what they were asking for or even above what they were listing at. Now today, properties are selling anywhere from 7 to 8% below their original asking price. This has been pretty consistent over the past 5 months or so, but this is just yet another indication that there's been downward pressure on pricing since early 2022. But also note that this is basically where the original list to sale price ratio has been since 2015 to 2019-ish. So this isn't really a data point that I'm really panicking over. Also, here's another reason not to panic. If we look at the most recent sale to original list price ratio data, say comparing January 2023 to April of 2023, January being 91%, April being about 93%, we see improvement. So South Florida showing some life in the real estate market. Let's go. Is the real estate market bottom behind us at this point? Let's review some more data and see what we think. Let's get into the days on market data. Monitoring this trend is a great way for us to understand if our market's slowing or accelerating. If you're new to our market update videos, let me define days on market for you. But first, you should definitely give us a like. You should boop the subscribe button for more content just like this. And days on market are defined as the time or the day a property goes active on the MLS to the day a contract is signed. Not when the deal is actually closed, but when the contract is signed. Sometimes people confuse this. If we compare the average cumulative days on market data from April of 2022 to April of 2023, we've seen a 107% increase. Now the average home in Palm Beach County will be under contract in about 56 days. Over the past year or so, we've seen the days on market continue to increase, but recently, over the past 2 months, the trend now seems to be leveling off. I find this data overall very positive. 56 days on the market is a fair amount of time to sit before you go under contract, and the fact that last month was 57 suggests that we're trending downward, if not leveling off, which is just great. Now, historically, between 2015 and through 2019, we saw about 80 days on market as the average. So this again reinforces that 56 days on market, fine, that's great. Now again, we are in the selling season. Typically the selling season here is between say February and May, and this period of time is when properties trade at their highest velocity. So we should expect strong and healthy demand during this window. It will be interesting to see what the summer shows us. I suspect we'll see an increase in days on market as we roll into the summer and we exit the selling season here. Now let's get into the number of listings graph. The number of listings graph helps us understand the current and anticipated inventory in our Palm Beach County real estate market. In April of 2023, our real estate market sold 2,425 homes. This is 23% less than the same time last year. This is also less than what we sold last month, but it's much more than what we sold in February and January of this year. So it will be very interesting to see what this trend looks like as we move into the summer. I suspect the low sales numbers are because of the lower inventory, not because of lower demand, but let's see what other data tells us. Let me remind you real quick that existing home sale data is considered a lagging indicator. And for those of you who are newer to our videos, let me quickly explain what that means. The majority of transactions usually involve a mortgage, which take 30 to 60 days to get closed. So existing home sale data likely includes contracts that were signed a month or two before they're actually reported as sold. As of May 1st, we've seen an 82% increase in inventory compared to the same time last year. But, and this is a big but, inventory is still 43% less today compared to December of 2019. This is absolutely putting upward pressure on pricing. And furthermore, what's interesting, we're seeing a decline in inventory over the past couple months again now. So we'll see what that does to prices here going forward. 11% less homes went under contract in April of 2023 as compared to April of 2022. Quick reminder, under contract data is considered a leading indicator of housing activity because a home goes under contract a month or two before it's sold. So pending home sales lead existing home sales by about a month or two. Also, something to keep in mind when you're looking at pending data, when a listing changes to pending status on the MLS, the contract price isn't revealed publicly until the deal is formally closed. So when you're looking at data, say on Zillow or other places, and you see pending and a price, remember that that may not be the price that the property is under contract for. It could be higher, it could be lower. That's just the price that was listed when the property changed status on the MLS. We will not know what the property actually is under contract for or closes for until the day it formally closes. So to wrap up the discussion on the number of listings graph, we can see a declining trend in every category: active listings, new listings, pending listings, and closed listings. So we'll see how this impacts our real estate market going forward. This is very interesting. The absorption rate shows how long the current inventory of properties would last at the current rate of sales. If no new properties were added to the market and sales continued at a steady pace, the absorption rate shows the number of months required to sell all the properties on the market. The absorption rate in Palm Beach County is now 3.64 months, which is absolutely, without a doubt, higher than it was a year ago. But more recently, it feels like the trend of it increasing has stopped and it is now leveling off, just like some of the other data we reviewed. I believe it's highly reasonable to think that the inventory may increase back to that 5 range at some point in the future, but right now the data is suggesting that we are leveled off and even coming down a little bit. The previous months of inventory was in the 3.7 range for Palm Beach County. So we look like we're trending back downward. Now that might just be a seasonal variation. We'll see as we enter the summer months. It's important to keep in mind though that the typical months of inventory from 2015 through 2019 was in the 5 months range. So this number in the 3s isn't too scary in my opinion. Now let's consider how mortgage rates are impacting our real estate market. As we can see from the trend line here, a 30-year mortgage is currently in the low 6s, and that's basically double what it was last year. So this is absolutely putting downward pressure on our real estate market prices. The 30-year mortgage has been hanging out somewhere between 6 and 6.5% for the past 5 months or so now, pretty much since December of 2022. I'm not going to pretend to predict the future of interest rates here, but I would say I do feel like the peak is behind us. We saw a 7% interest rate in October of 2022, and since then we've trended downward for the most part. I do feel like if I was betting, I would say that 6.5% is probably where we will remain for the foreseeable future here. I do think it's also interesting to look at the spread between the 10-year Treasury and the 30-year mortgage. And that historically runs around 1.79%. And recently it's been around 2.8%. So I think it's possible that we see further interest rate compression or interest rate reductions here in the future just by simply letting the market return to its norms. One final note on interest rates. I don't think people really appreciate the impact to purchasing power for a buyer on an interest rate change from 3.5% to 6%. So let me demonstrate this for you real quick. So if you took the average sale price of $710,000 here in Palm Beach County and you applied an 80% LTV loan to it at 3.5%, your payment would be $2,551 per month. Now, if you kept everything the same and just applied today's interest rate to the same purchase, you'd pay $3,405 per month. That's a big difference, right? Now, what if you wanted to make the same payment you were paying for $710,000 a year ago today? Well, you'd have to drop that purchase price all the way down to $531,700. That's a 25% reduction in sales price or a 25% reduction in purchasing power for the buyer. That is a big, big change. And if that isn't downward pressure on pricing, I don't know what is. A discussion I've been having a lot lately with customers on interest rates and how they impact inventory might surprise you. The reality is that people who have owned a home or purchased a home over the past 5 years have locked in 30-year mortgages that are incredible. They have amazing rates, 2, 3, 4%, and they don't want to give that up because their cost to live in those homes are very cheap relative to what they could do today if they went out and bought something new. So even if they have a need to go buy a new home, to upgrade because they have too many kids in the house and they don't have enough bedrooms, or to downgrade because the house is too big and they can't handle the size anymore, they tend to stay put because the cost to do that transaction is just more money than they are willing to tolerate or capable of handling. So this impacts inventory dramatically. It puts downward pressure on inventory. Now let's talk about insurance real quick. Insurance is definitely another hurdle for buyers to overcome when it comes to cost and even actually being able to physically close on a deal these days here in South Florida. It is absolutely putting downward pressure on pricing without a doubt. So let me quote the National Association of Insurance Commissioners. The trend of paying up to protect your home is expected to continue in 2023. According to the Insurance Information Institute, premiums in Florida are expected to increase an average of about 40% this year, even though lawmakers in Tallahassee approved sweeping reforms in a special legislative session last month. Let me share with you some details about the new construction inventory coming in Palm Beach County and how that's going to impact the future overall inventory of our housing market. 17,000 people are expected to relocate to Palm Beach County in 2023. Also note that in 2022, more people moved to the state of Florida than any other state in the country, making Florida the #1 state for fastest population growth in the United States. The idea that we are not building enough new construction in South Florida to keep up with the population growth in our area feels pretty true to me, and these numbers feel like they reflect that. In 2022, we saw 6,053 permits issued for residential dwellings in Palm Beach County. In Q1 of 2023, we saw 724 permits issued for single-family homes and about 1,142 permits issued for multifamily units. Now, that does not feel like we're keeping up with the same pace as last year, and I don't think the population growth has stopped based on what I'm seeing. So it feels like we are going to continue to experience this low inventory environment here in South Florida if the population growth continues at the same trend, or even if it slows down. It feels like it's still going to be a very low inventory environment here into the future. And that's pretty crazy. Only 724 single family home permits issued in Palm Beach County in Q1. That's pretty low from my perspective based on how many people are moving to our area. Another hot topic / issue that builders are facing here in South Florida specifically is it's not cheap to buy a new home here. And that's because land is scarce and construction costs are as high as they've ever been. Now let's get into the psychology of buyers and sellers in today's real estate market. And if you're thinking about buying or selling and you want to know how to maneuver in today's market, I'll give you some tips on how I think you should do that. The first thing I want to talk about is if you look at the average sale price data and compare it to the average active listing data, it is very obvious that buyers and sellers are not on the same page about what a property is worth. As a listing agent representing sellers, my typical communication is let's put our buyer hat on together and let's be honest and realistic about what we think this property is worth. Let's look at comps that are recent and not look at comps from early 2022. And let's really try to think about what we think a buyer would think our property's worth. Let's choose that number and let's go out with that. And if we do that, we typically drive a ton of traffic to the listing. And in this current market, we are experiencing multiple offers, bidding wars when we do this right. Now, as a buyer's agent, this is how I think about things. A lot of properties are listed for more than what the market is dictating they're worth. Now, eventually, a lot of these sellers are going to come to reality and sell the property for what it's worth. So if we walk through a property and we say, oh, we like it, but it's definitely overpriced, let's make an offer. Let's get in there because a lot of other buyers are not making the offer. So when the seller does come to reality and decide they want to work with someone, our offer's already in there sitting on their table and we will be the first call for them. So we just kind of be patient, put offers in where we think is appropriate, and just wait it out. I think as time goes on, this situation will work itself out as the market continues to normalize, things begin to level off. Buyers and sellers will eventually get on the same page about what value is for the most part. But in the meantime, how do you operate in a market like this if you need to buy or sell? So you typically sell for more than what your home's worth when you do this. You get multiple offers. You sell fast and you get the terms you want. These are all big wins for the seller. Trust me, after selling 125 or more homes in the last 12 months, this is the way you want to approach selling your home. The data we reviewed suggests that the market in Palm Beach County is showing signs of resilience, which is great. Now, the market has absolutely changed since this time last year, without a doubt. Prices have come down, days on market have increased, inventory has increased. But recently, what we've seen is some signs that the market isn't in this downward spiral. It's actually leveling off, if not improving, in spite of these pressures that are pushing prices downwards, such as high insurance premiums, high interest rates, and the other hurdles that we discussed during this video that buyers are currently facing. So it'll be very interesting to see how the market performs as we enter the off season in these summer months here in Florida. I am very optimistic, though, about the future of South Florida's real estate market. I do, however, believe that there will be continued softening as we enter the second half of 2023. But not too much, though, because there are forces at play here that are pretty strong and putting upward pressure on pricing, such as low inventory and high population growth. So we'll see what my predictions look like as we enter the second half of this year.